Bloomberg Tech Asia is live with Shery in Tokyo and Annabelle Droulers in Hong Kong.
In this episode, we're focused on the multi-billion-dollar circular deals fueling concerns of a bubble in the global AI industry. Where do Asia's tech titans fit into the AI money-making machine?
We hear from the chairman of NVIDIA and OpenAI partner Foxconn on whether he's worried about the future of financing and monetization for AI. We'll have more from our interview with Young Liu in Taipei coming up.
And while some of Asia's tech players stand to benefit from the AI boom, is the spending sustainable for others? We take a deep dive into Softbank's big AI bets and discuss the risks to Masayoshi Son's ambitions.
Well, welcome to this month's episode of Bloomberg Tech Asia. And Shery, I have to say, if there's a single narrative that's very much defined the tech industry over the past few months, it's been these fears of bubbles in the AI space, but also concerns around circular deals. And that might not be what executives like NVIDIA's Jensen Huang want to hear. And I thought it was really interesting in the recent earnings, he really tried to tone down any sort of criticism on that front. But at the same time, the nervousness does continue to persist.
Especially given that it's a Jensen Huang world these days, right? So do you have these concerns about suppliers funding these big customers also investing in suppliers? And then you have the very murky revenue sharing agreements, right? So let's take a closer look at the AI money machine and some of the key Asian players involved.
We're thoughtful, along with OpenAI, thoughtful in aligning on and taking into consideration visibility of demand and their financing capabilities. And so I think the ambition's large, but the execution is disciplined.
As tech firms ramp up spending on advanced chips and data centers, concerns are mounting that the AI boom is being propped up by a wave of circular deals. At the center of it all is NVIDIA, the company often described as selling the shovels in today's AI gold rush, as it strikes mega deals to invest in the very companies that buy its products. With capital flowing into companies that have yet to turn a profit, cycling back into data centers and ultimately returning to NVIDIA as revenue from their chips, trillions of dollars are rapidly being spent on technology that remains somewhat unproven as a business model.
If we're not going to find $2 trillion of revenue to justify the AI revolution, which I think is impossible by 2030, the likelihood is we're going to have a significant correction.
Many of Asia's largest tech firms are exposed to the AI boom as they play a critical role in the global supply chain. Softbank is positioned primarily as a financier, with active investments like OpenAI feeding into its profits. Its stakes in chip companies also provide real cash income. In November, the Japanese conglomerate revealed it had sold off its entire stake in NVIDIA for $5.8 billion to bankroll founder Masayoshi Son's AI ambitions. This has amplified market anxiety over an industry bubble. Meanwhile, South Korean heavyweight Samsung Electronics and SK Hynix have seen margins rising on a commodity that NVIDIA's GPUs can't function without: high-bandwidth memory chips, or HBMs. Bloomberg Economics sees demand for Korean chips surging by 45% next year, almost twice the current clip.
If you are in the players, then I don't really see that there was that much bubble. There's a lot of potential.
And TSMC's results are often seen as an impartial barometer for the real demand underneath the hype. It's the go-to chip maker for NVIDIA and its competitors AMD and Qualcomm. In October, when TSMC posted its slowest monthly revenue growth in more than a year, it fueled fears that the AI rally itself had become unhinged from fundamentals. Relative valuations of Asian markets suggest that companies in this region are generally more protected by real earnings expectations compared with U.S. counterparts.
As we get forward into this bubble-like period, it becomes an even more difficult question as a capital allocator in terms of whether you continue to shovel cash into this potential inferno.
And while some skeptics continue to warn of an overdue correction, others remain confident in AI's long-term potential.
The bubble is merely that it's gotten ahead of itself, not the likelihood of growth in the future. Okay, not saying it's worth its price, right, but there's absolute substance under the foam.
Well, Shery, we mentioned TSMC there, but if there's another company in Taiwan with very close ties to this space, it's Foxconn. Now, this is a big hardware play. It's the largest supplier of AI servers to Oracle. Oracle, of course, working on building up Project Stargate in the US, but it's also set to be involved directly now with OpenAI on its infrastructure ambitions. So I spoke with the Foxconn Chairman Young Liu, and I asked him about whether he's concerned at all about these so-called circular deals.
I look at from the user's point of view, the use of the model. Okay, from that angle, as a user for this large language model for our manufacturer, for our daily uses, we have a great potential for the use of that capabilities. We know that, and it's not just for us; it's for all businesses. They need it. So the demands are there. How to fulfill it and in what way in terms of finance? They will figure out a way. As long as there's demands, I think people are concerned about whether the demands are not real.
What about the monetization, though? Because that is also a concern. How can a company like OpenAI, for instance, with such a big spend on infrastructure, get enough revenue to make the financials make sense, essentially? I mean, are you concerned about still joining forces or signing this MOU with a company that's not even yet profitable?
Look at this. They have 800 million users nowadays already. If they can get let's say $100 a year, that's about 80 billion a year.
Yes, if people are prepared to spend that much,
pay 100,
I think is the
100,
question.
Not 1,000. Okay, so if you calculate per user revenue, that's maybe achievable, and it's up to them. What kind of products that they're going to provide. Okay. So, like they have this, they formed a joint venture with law firm, with Johnny Ive, called I/O, the company called I/O. But they're trying to come up with new edge devices, right? If that comes, something, will happen.
But the fortunes of companies like NVIDIA, OpenAI, Oracle, they're increasingly tied together. Is there any risk of that? If one domino falls, the other one can wobble as well?
If we had to, if we look back in the 2000, about the internet bubble, people call it bubble, right? But if you look at what it is now today, the top, at least 7 of the top 10 high-tech companies in the States, they're all internet companies. I imagine maybe 10 years from now, the top 10 of the high-tech companies in the U.S., they're mostly AI companies. That's a huge valuation, right, for those companies. And the investment for that, I don't think it's too much.
Foxconn Chairman Young Liu speaking about these circular deals in the AI sector. And coming up next, we turn our attention to Softbank's AI exposure from OpenAI to massive data hubs. But with billions of dollars in deals and rising debt, investors fear its bold bets could backfire if the boom falters. This is Bloomberg. You're watching Bloomberg Tech Asia. Let's delve into Softbank and its AI ambitions. Founder Masayoshi Son has sold down NVIDIA holdings to bankroll AI projects, from Stargate data centers with OpenAI and Oracle to planned $1 trillion AI hub in Arizona. The Japanese conglomerate's portfolio spans OpenAI, ByteDance, and Perplexity AI. But with billions of dollars committed and debt rising, some investors worry these bold bets could backfire if the AI boom falters, Annabelle.
Yeah, Shery, let's bring in our panel to discuss this. Amir Anvardade is Japan equity strategist at Asymmetric Advisors, and also with us this morning is our Bloomberg opinion columnist, Shery Ren. But Amir, we can get started with you, and I loved how just Shery put it there, that concern that this falters, the boom essentially in AI goes bust. I mean, is SoftBank's bet on OpenAI going to sour, do you think?
I think SoftBank is a poster child for any bubble. Okay, this is when there's a bubble bursting somewhere, short SoftBank. That's the rule of thumb, because they're always all over any theme that comes up. This is certainly not the first time we've been worried about a burst of a bubble and SoftBank getting involved or being involved in some big way or another. So that's the first thing. So you got to know the psyche of Son and and how he gets so excited and about themes and we actually had a buy on SoftBank just after the whole AI boom took place, because we thought that he's definitely going to jump on the bandwagon, because that's who he is, and it's exactly what happened. But the fact that ARM is now become an AI play, although he bought ARM initially to push it into Internet of Things, which bombed, by the way. And now he kind of pushed it as a big AI play. It's not as big as AI play as other AI plays, and yet it has a massive valuation premium to it, which is another issue that we've been very concerned about, and it's another thing. But yeah, just going back to SoftBank, we think that we're not so much just worried about the bubble and the law of greater numbers and how much more investments we're going to see coming from these hyperscalers and how much needs to be financed through debt and all that stuff. But the question mark we have is that have they put the house on the wrong bet, which is OpenAI? Obviously, the concerns are much more isolated to OpenAI, given that Google has come out, at least for now, a more kind of superior product with Gemini 3.
Right.
And the concern is, right? So the concern is that, Google has plenty of other businesses. It's got great cash flow. It's got very strong balance sheet. Even, obviously now is borrowing for its investment plans. But, so is Meta and so is Amazon, and these guys, they all have their own business.
So
OpenAI does.
So I want to bring in Shery here because, of course, Amir, you're talking about really SoftBank jumping on the AI bandwagon, but the question is, are they jumping in too late, right? And Shery, you have been a little bit skeptical yourself.
Yeah, and Shery, if you look at the stock market, right, smart money has decided to take sides. What we see is Google hitting record high this year, and then where SoftBank or even SoftBank's Stargate partner Oracle, right? If you look at Oracle stocks, it's so telling. Basically, Oracle has given up all gains made since early September when they struck the $300 billion deal with OpenAI. In fact, it shows that the stock market, stock investors are penalizing Larry Ellison for turning itself from a legacy database company into an AI company. So I think. Amir made a very good point. Is SoftBank betting on the wrong horse here?
Then, Shery, I want to talk to you about the financing as well. How concerned we need to be about the structure that SoftBank's taking?
Right. So what we are seeing is that SoftBank basically promised to invest $30 billion into OpenAI by the end of this year. But we all know SoftBank doesn't have that much money. So they have been selling assets, right? They sold the entire $5.8 billion stake in NVIDIA and $9 billion worth in T-Mobile. NVIDIA is a cash cow business. T-Mobile is also predictable, stable telecom business. And in return for what? OpenAI basically has, I'm not saying OpenAI is going to turn into WeWork, but very similar business model in that it has an asset liability mismatch. They have committed billions of dollars in terms of cloud contract. But on the other hand, investors, we're not signing any contract with OpenAI to pay for the ChatGPT. So I think OpenAI can very easily run into a liquidity crisis, and the SoftBank somehow has to help that.
Amir, what do you think about Shery's point when it comes to those parallels to WeWork, and could potentially its push into generative AI and domestic investments have already been completed and its rollout in 2026 help with its revenue growth, though?
I totally agree with Shery. It's so similar to WeWork. We had a short on SoftBank then, and the fact that SoftBank continued to put money into WeWork after the IPO blew up, and there was no IPO suddenly, and then they needed a rescue. But I mean, remember one thing that the Foxconn chairman said in your program, that OpenAI has 800 million subscribers, but they only have 35 million paying subscribers. So it's worth keeping that in mind. One. Two is that OpenAI is committing over $1.3 trillion in CapEx over the next few years. So that money has to come from somewhere. And I think it will be very telling. Shery was talking about Oracle, which is another, basket case in our view. I thought the leaks that came out at the beginning of October, that Oracle has a gross profit margin of only 17% on their infrastructure of AI leasing versus their core ERP business of 70%. I thought that was really, really telling, that this is an accident waiting to happen. Now, of course, the shares of Oracle, as Shery was pointing out, has given up all its gains. And of course, more importantly, the credit default swaps of Oracle has gone absolutely nuts since then, right? So, and obviously, it's got the highest debt-to-equity ratio of all the hyperscalers. I wouldn't even call Oracle a hyperscaler, but let's assume that it's one of them. It really is the highest debt. But yeah, so just going back to SoftBank and OpenAI, I think that it's really interesting to also point out that, you've got Alibaba with their QN, where they have an open source. They're basically giving away the technology is an open source technology. And also we've got DeepSeek as well with the open source. And, they're expanding beyond China as well. So, corporations and enterprises that want to integrate AI into their systems, they can get it for free from Alibaba. So that's another thing to bear in mind. What we're saying is the large. Sorry, just to finish the point. Large language models is commoditized business. And yes, you have the internet bubble of the past, but if you go back to the internet bubbles of the past, every company had its own different ambitions. You had Amazon wanted to be a bookseller, you had another company wanted to be search, and so forth. In this bubble, everybody wants to come out with the same thing, a general artificial intelligent machine. So they're all going for the same thing. That makes it very, very different than the internet bubble of the past.
Amir, I do just want to get your view very quickly because we are running out of time, but for the companies that are also in Asia, more on that hardware side, the likes of TSMC or Honhai, Samsung, SK Hynix, if you see this bubble bursting, are those ones better positioned, do you think, to weather the storm?
I think TSMC makes all the chips anyway. No matter who's going to compete with NVIDIA, whether it's Broadcom, Marvel, whether it's everyone's going to be basically going to TSMC. I think Intel is on the verge of getting some business, that's for sure. But I think TSMC is by far the safest. Of course, the shares will come off if there is a bubble and if the bubble does burst. But yeah, I mean, then you got the other companies which are more into different groups and different camps, which will suffer the most if there is an internet bubble burst. The one that's going to suffer the most by far is going to be OpenAI. We know that because they just don't have any other business. And any company that's attached more to OpenAI than other camps, say Google or Meta or Amazon, they're going to be suffering the most.
What's your final thoughts here, Shery, on where we go?
I think the AI whole investment scheme is basically a pyramid. The ones on the top of the pyramid is the upstream providers like NVIDIA, TSMC, like what Amir was saying, they will be fine. But on the bottom layer are the large language model developers like OpenAI, Alibaba's Qianwen, DeepSeek, etc. And I think just from a traditional viewpoint, right, like a market that is more competitive, that each individual players are just not going to make as much profit.
All right, Shery, great stuff. Amir as well. Great thoughts from both of you. We just don't have enough time. That was Amir Anvazadeh there, Japan equity strategist at Asymmetric Advisors, and our Bloomberg opinion columnist, Shery Ren. I will have more ahead on Bloomberg Tech Asia. This is Bloomberg. Well, Shery, I think we touched on in that last block there, but just about how these AI bubble fears, they're really very pertinent in the US. Does the Asian context look a little bit different? And does it look different in China? I think one thing that was really notable in the Alibaba earnings this week was that we had Eddie Wu, the CEO, of course, who was asked this very question, is he concerned about an AI bubble? Actually, he said that he doesn't even see one forming within the next, say, 2-3 years. He still thinks that the resources for AI and the supply on that side is not going to be able to meet demand.
Yeah, especially given how China is evolving its AI ecosystem, right? Low cost, more efficient. And we have seen the numbers from Alibaba, for example, doing pretty well when it comes to their cloud division, which, of course, houses the Qwen AI app, which already was downloaded more than 10 million times after the relaunch just last week. So we continue to see this two-track economy for tech, even in China, very strong on one hand, but also e-commerce and other parts of the Alibaba business lagging.
Yeah, it's really interesting. And I think to your point, I mean, that relaunch for the consumer model really talks to that strategy that Alibaba is taking, which is to try and integrate it and monetize through other ways. I do need to point out, though, that our Bloomberg Intelligence team is a little bit more bearish here because they're still looking at that adjusted EBITDA basis here. And really, when you take a look at how the cloud division performed, I mean, the revenue rose by just $132 million. So they're saying still the ROI is not there, even if the overall capex, of course, is a lot lower in China.
But what is really for certain is that this AI economy will continue to grow, right? Bloomberg Intelligence also thinking that the AI ecosystem in China will coalesce around Alibaba, Tencent, ByteDance as well. Well, that's it from this edition of Bloomberg Tech Asia. We'll have plenty more coverage, and also check out past episodes on YouTube. This is Bloomberg.